Business entities overview. Let's talk about self-employment tax. Self-employment income tends to be either the Schedule C net income or the guaranteed payments and payments for services that partnerships pay to partners. There's a variety of other things that the IRS lists, like payments for serving on a board of directors. Earnings not subject to SETA include any W-2 income, including if a shareholder is paid by an S corporation as an employee, that's going to be W-2 income. It is not dividend income or interest income. It is not most rental income. Any rental income reported on a Schedule E is not going to be subject to SETA. Capital gains and losses are not. NOLs from other years do not reduce the amount of income that is subject to SETA, and there are some other items. SETA is reported and calculated on Schedule SE. You file a separate Schedule SE for each taxpayer. So if you have a husband and wife and they are each self-employed, they will each file a Schedule SE because this is tied to their individual Social Security number, and it goes to the Social Security Administration and it affects their Social Security benefits. If a taxpayer has more than one business, the net incomes are combined onto one Schedule SE. So if Mike has two businesses that he's running, he is selling Amway and he's selling auto parts on the side, he's going to combine those into one Schedule SE. And then Molly also has her own business. She is a self-employed hairdresser. She is going to have another Schedule SE. So there will be two Schedule SEs on their married filing joint Form 1040 for the three businesses. A loss in one business may offset the income in another business for the same taxpayer for the same year. If net earnings are under $400, you do not need to file a Schedule SE or pay self-employment taxes. And then because a self-employed taxpayer has to pay both halves of Social Security and both halves of Medicare, but is not allowed to deduct half, there is a mechanism to make this equivalent to a corporation or to an entity that can deduct it. And that is that they reduce the amount of earnings subject to Social Security by the employer's portion, the 6.2% and the 1.45%. And so only 92.35% of earnings are taxed. When you go to do the Schedule SE, you will see that you multiply the net earnings by 0.9235. But I wanted to tell you why that is the case. So let's work through some examples. You have examples in your PowerPoint slide for Frank, Gabriella, and Hunter. Get those out, follow along, and let's now turn to Excel and work through them. I am going to do this using 2022 amounts and caps. The earnings cap for the year is indexed to inflation, so if you are doing this for 2021 or 2023 or 2024, the methodology is the same, but you have to change the earnings cap. And I will make sure that that is also in green so you know that that is a number that is indexed for inflation. We're going to start out by talking about Frank. And Frank has $70,000 of income subject to self-employment tax. Now, I explained that we don't charge self-employment tax on every dollar of income. We only charge it on 92.35% of income, and that is to take it down a little bit for the deductible portion of the self-employment tax itself. The other thing that we need to know is what is the earnings cap for the year. The earnings cap for 2022 is $147,000. We cannot charge the Social Security portion of SETA on more than $147,000 of wages or earned income. Then we're going to take a look and see what Frank's W-2 wages are for the year. They're $25,000. We need to take the difference between the two to see how much more we can charge him self-employment tax on, or Social Security, the Social Security portion of the self-employment tax. Now what we're going to do here is we're going to say a portion of his self-employment is going to be taxed at the 6.2% times 2. Remember, he has to pay his own half and the employer's half, and that taxable amount can't exceed a total of $147,000. He's already been charged on $25,000. That means we could charge him on another $122,000, but he only earned $64,645. So we're going to take the lower of these two amounts. And let me just put a formula in to do that. We're going to take the lower of the amount that is subject to SETA, or the amount that remains between the cap and the W-2 wages he's already been charged Social Security tax on. And that is the $64,645 in this case. Now for the Medicare portion of this, it is always going to be just the earnings subject to self-employment tax. There is no cap on the Medicare portion, the 1.45% times 2. And the 2 again is being half employer and half employee. So when I do those calculations, I am going to multiply them by the correct amounts, and we'll take a look at those formulas. So here I'm just taking the taxable amount times the 0.062 times 2, just like the description says. Here I am taking the $64,645 times the 1.45% times 2, and then I am going to sum these two amounts, and this is the total amount of the SETA tax. Let's move on to a slightly more complicated example. We're going to deal with Gabriella. She also has $70,000 of self-employment income, and we are still going to multiply that by the 92.35%. She still has a cap of $147,000 since it's 2022. The difference here is that she has $175,000 of W-2 income. Now, what happens here? If I just tried to subtract this, if I took this formula, let's just take the formula and copy it across, I'd end up with a negative $28,000. She was only taxed on the first $147,000. She wasn't taxed on all $175,000. We're not going to be able to subtract anything. We need another formula in here. And the way I like to do this is just to say, if this amount minus this amount is greater than 0, then we're going to do that. We're going to take this amount minus this amount. But if it's not greater than 0, then we're just going to have 0 in there. And that's a nice formula. Or you could just look at it and you could say it can't ever be less than 0, and you could do that manually. Now we're going to use the same formulas here. Let's go all the way down, just copy it across and see what happens. How much is subject to the Social Security tax? Well, it is going to be the lesser of line 6 or line 3, and line 6 is 0. So we can't charge Gabriella any more Social Security tax. She has already been charged the maximum amount by her employer. But all of her earnings are still subject to Medicare, so she's still going to have to pay the $1,875 Medicare portion of the SETA, and her total SETA tax is the $1,875. Okay, so we've had one that is below the cap, we've had one that is above the cap. What are we going to do next? We're going to do Hunter, and Hunter, of course, is going to be right in the middle between the two. Hunter also has the $70,000 of taxable income. That's also going to be multiplied by the 92.35%. The earnings cap is still $147,000, but in this case, he had $130,000 of W-2 income. So not everything has been taxed yet, right? We can still tax him on how much? Can you see how much? $17,000. Let's just copy all of these formulas over. When we copy that across, we can see that the 147 minus the 130,000 gives us a positive $17,000. So that is the amount that we can tax them on Social Security, Hunter on Social Security, and we're going to tax him on all of his self-employment earnings, the $64,645 for Medicare. We're going to multiply that amount times the 6.2% times 2, that amount times the 1.45% times 2, add those together, and Hunter's SETA tax total is $3,983. And this looks like a good place to stop. If you have questions, get in touch. I'll see you next time.